Welcome to the NFT Finance Podcast, sponsored by Goldman Sachs. My name is Terry, and I'm joined by my co-host Helmus. Today, we welcome David from SPICYEST, an NFT market making firm.
Hey, David. Super glad to have you on the podcast. I guess before we jump into what SPICYEST is, could you give a little bit of background about yourself, how you got into crypto and NFTs?
Yeah, for sure. And hey, everyone, thanks for having me on. For me, my background was in computer science. I studied computer science in college. And then after I graduated, I worked in Silicon Valley for a bit as a software engineer. I started off was a backend engineer at Discord, building out their game store tech back in the day. And then after a while, I transitioned over to Opendoor, where we were building models for pricing homes and then market making for them. And then after that, I was working on recommendation systems at Twitch. And then lastly, I was building out the editor platform at Figma. And then, on the side, I was always curious about crypto. And so I was always trading. And, a group of my friends and we started trading some perpetuals. And that led to some research projects on NFTs. And that's kind of how we got into SPICYEST.
Yeah, that's great. So maybe let's jump in. What is SPICYEST? And then did you first, you mentioned you were working at Opendoor doing some market making there. Is that where you kind of got the first idea for SPICYEST?
Yeah, I think it's pretty similar. NFTs and real estate, they're both pretty non-fungible. And they trade in somewhat similar ways, they're both liquid as well. Definitely draw some inspiration from Opendoor. A lot of it also is from the trading that I did, with my pals on the perpetuals. So it's a mixture of both, I'd say.
Nice. So what's the TLDR on SPICYEST?
Yeah, so SPICYEST, we're trying to be the first institutional grade market makers for spot NFTs, and we're building out this platform that serves as both a OTC portal where you can land there if you own an NFT that we provide liquidity for. You can get a quote from us, and we also provide this pricing oracle for you as well in real time. And this takes data from the markets and then plugs it into our models, and we can come up with a price estimate for that NFT as well.
For something as non-fungible and fragmented as NFTs, what does market making look like?
Yeah, so I would say traditionally in equities markets, the bid and ask side are pretty symmetric. But in the world of NFTs, it's there's only one NFT for that NFT that you're trying to buy and sell, unless it's ERC 1155. Most are ERC 721. So you kind of have to estimate what another NFT would be worth based on comparable NFTs that are maybe similar to it. And so this is a typical process known as comp-based pricing. And we leverage the same techniques from that practice here at SPICYEST.
Gotcha. And have you guys ever had any difficulties in sort of navigating cross-exchange, specifically due to the differences in, say, royalties and policies per exchange, say, for example, a blacklisting policy on OpenSea? Because when we have been liquidating NFTs at Goldman Sachs, this is something that's been a particular consideration. Just because an NFT is cheaper here doesn't mean we can actually liquidate it there.
Yeah, for sure. On the topic of NFTs are blocked by OpenSea, that's something that we definitely take into account. That affects the liquidity that's available to us, and so we do try to price that in. We also just keep track of things that are just not available on a certain marketplace like OpenSea. In terms of the fees and the structure of each markets, we haven't run into any problems with that. So it's pretty much business as usual on each of these platforms.
What are some other considerations besides sort of exchange-specific market structure, say exchange-specific blacklisting policies and royalties? What are some other considerations that go into market making, sort of cross-exchange, cross-platform in NFTs?
Yeah, I would say for each of these marketplaces, it's just having to write custom code to integrate with them. Some of them have different policies on like rate limiting and like how like what type of offers are available. For example, Looks Rare has like pretty advanced like one cancels the other types of orders, and that's something that like other like OpenSea doesn't offer. And so we might have code like ad hoc code for that, but we might not have it for other like platforms, and that's just something which we just have to be aware of as well.
I'm not sure if it was Looks Rare, but something that we at Goblin Sachs found extremely useful was collection bids and collection offers. Is there sort of in lieu of that any type of infrastructure, whether it's on the marketplace side or on the data side, that you wish as a market maker existed in NFTs?
Yeah, that's a great question. Let me think real quick about that. Yeah, I think one thing that could be interesting is a centralized exchange for NFTs where like settlement happens much faster than on chain, and then it's like a custodial service. And then once you leave that ecosystem, then it gets settled on chain. That's something that like we've been, I would like to see personally. Like, I think it would make trading a lot easier, and also might lower the fees by quite a bit, since you don't have to pay for gas on each side of the trade.
Got it. Yeah, that would be helpful for us as well. And that's really cool. I guess something at GS that we've been looking at for a long time is somewhere where we can hedge our loan book that has liquidity that isn't hyper overly collateralized. So we've actually been looking into people that are developing indexes, for example, so that we can do option settlement on those indexes instead of having, options like delivered at expiry with over collateralization. I'm guessing in lieu of that, like what is your hedging strategy and what has come into use for you guys in terms of what's already out there?
Yeah, so risk management is something that we think about a lot, and there are a lot of there's a couple of ways to do hedging when it comes to NFTs. The first that's pretty commonly available right now is to short like correlated assets to NFTs. And one example of that is like taking a short position on Ethereum when you hold like NFTs, since we've generally noticed like correlation between like those two assets. And there are other like protocols that are launching other like derivatives on top of NFTs that will let us take like short positions on NFTs more directly. For example, the folks at Putty and Hook are building options, and then Trepty, they're building futures. I think those are really promising. We're like keeping a close eye on them, as well as like those are building like NFT perp as well. So those would let us take a direct short position on NFTs to hedge out like some of the long exposure that we have. So yeah, those are ways that like we're thinking about hedging.
Yeah, same. I guess we're almost looking at the exact same things, right? Because we actually did this poll across more of the prominent NFT collectors and or NFT finance whales about how they hedge their books. And I think it was like 70, 80+% of the responses were either they don't or they just take a directional, opposite exposure on ETH. And there really isn't like a good way to get perfect delta neutral on any of your NFT positions really at the moment.
Right.
Got it. And what are some data pipelines, toolings that you guys have built to help with the market making efforts? Like what are some of the core data points that you guys are looking at, without giving away too much?
Yeah, for sure. I would say for any like financial like institution that's involved in like any sort of trading, I think data is like probably the most important thing for us. Like we take a lot of care in like cleaning our data, and also like making sure our data pipelines are robust to any sort of like changes in the structure. And so we use a lot of we built our own indexers. We definitely don't rely on like external sources of data. We have like very strict like standards for our like on the reliability side and also like on the like latency side. So that's one thing that like we've made sure to like build ourselves. We also like just build we use a lot of these tools that like I've incorporated into like our system just comes from some of the tools that are used in like Silicon Valley that a lot of larger tech companies would use, such as like Airflow and like orchestrators like that. But those actually are pretty helpful like in this context as well. So,
and can you give us a sense of the latency times of your proprietary data pipeline then?
So like everything is for us is streaming in real time. So you'd imagine like within a few minutes, like we're up to date, up to like synced up with the world.
Nice. And perhaps by looking at this data, have you found anything that was really sort of unexpected? I guess for context, like we've worked with a lot of data ourselves. And when we first started at GS, like none of the APIs that are available today were available. So we also had to build our own indexer and our own scraper, and we had to, do all these things ourselves as well. And by looking at the data, we found a lot of very weird things. Like for example, on Nifty Fi, I think it was something like in excess of 50% of people do not default on their loan despite it being in negative equity. And we talked to NFT Bank about it. And one thing that NFT Bank found really interesting was that actually the rarer the trade doesn't mean the more expensive the NFT. And there's all these like, among the people who are looking at all these NFT data, people always find these like very weird or kind of very odd market characteristics. I'm curious if you guys had something like that as well.
Yeah, we also, I think a while back, we published a piece for, I think it's Chain Runners, where we were looking at trades and then we were looking at like prices. And one of the things that we noticed was if there's like a backstory to a certain trade, that's not, that wouldn't be obvious from like a rarity site, or like if you were, unless you were part of the community and like knew about that like backstory, you wouldn't know why like a certain trade was like worth a lot more than what its frequency like implied. And then we also saw some like we were looking at some like statistics on like wallets and how we were trying to characterize like certain types of traders within certain collections, and we used that to like see like how healthy is this collection based on the type of holders they have in their community. And we also published something for that on ChinMonkeys, and there's still I think that's on our blog as well as like on our Twitter as well, so you can go check that out afterwards.
Yeah, definitely. And I guess one thing I'm curious about is for the retail audience and for the collectors that we have, what would be like a tip as a pro market maker in terms of liquidating your assets?
Yeah, I think there's a lot of trading opportunities out there, and the most important thing is like to plan ahead. Like, what is your entry like plan, and then what's your exit plan? And then once those conditions are met for your entry or exit plan, you just move fast and with conviction. And so, if you have like a certain opportunity that you're seeing, like, hey, this collection is about to pump, but I'm holding all these other collections that I think are now stale and I need to get rid of them, then it's probably the thing that you need to do is like to liquidate those NFTs, and so you can make your next trade and do that as fast as you can, because otherwise you would be missing out on that opportunity. And that's kind of where we step in as like liquidity providers. We're going to be like ready to take those NFTs off your books. And so that you can make the next trade to like 10x whatever principal you had. So,
gotcha. And I want to zoom out a little. We've been talking a lot about sort of the operations that you guys are up to, but I do want your opinion on the general landscape of NFT infrastructure and NFT finance. How do you see the space progressing over the next, say, year to 2 years?
Yeah, so there's a couple of. So I'll start from like the where I like see a lot of. Where I draw a lot of the like intuition from it. It's like if you own a Bored Ape, there's a really good chance that you want to make use of the like value that's locked up in the Bored Ape. And so the next step intuitively for that is, I want to, take a loan against it. Since it's holding its value, like it's being traded at a certain price at pretty high volume, there should be some counterparty that's willing to underwrite, the risk associated with like writing on a loan for this. And so I definitely see that as like the first step towards like financializing NFTs. And then over time, there's going to be other services that pop up. For example, liquidity providers like us that help with risk management, or like derivative protocols that are built on top of NFTs, and also like securitization, for example, of these loans, and having that being traded on secondary markets. And I think these are all the things that like we'll start seeing evolve over time as the space becomes more mature. And then if we project into the future, I definitely see like the evolution also happening with like what is the use case for an NFT. And the way I think about NFTs is that they're an abstraction for any sort of non-fungible asset, whether it's digital or real world. And I actually expect to see some real world assets be bridged into the NFT space, so that they can leverage the benefits of all this complex financial infrastructure that's already been built for NFTs. So one example of that could be cars or homes. Their titles could be traded as NFTs in the infrastructure that's already been built.
We're actually really surprisingly on the same, almost exact page here, right? Like at GS, how we think about our roadmap internally is that NFTs and NFT infrastructure and NFT finance is really a conditional bet. Either the market stays where it is currently, but penetration of these NFT utility functions increases to a point where people are taking advantage of locked liquidity, which they should. In which case, the market is growing tremendously over the next 2 years. Or NFTs as a whole become, as you said, an underlying mechanism that represents just a huge variety of assets. In which case, again, conditional on that happening, the NFT infrastructure and NFT finance market then becomes just by orders of magnitude larger. So we really see people like you and us as making important functions and really providing that grease in the wheel in that world. And we're yet starting extremely early. And that's how at least we see it internally at GS.
Yeah, absolutely. I think the work that you guys are doing at GS is really exciting. Being able to unlock like the liquidity inside like a lot of these NFTs is going to be huge for the next steps in like financializing NFTs.
For our listeners out there, what's next on the roadmap for SPICYEST, and how can they get involved in the project? How can they learn more, and how can they contribute?
Yeah, so I think our roadmap, we're looking to increase like the functionality of our OTC portal, making it more flexible, supporting bulk sales. So if you are a whale and you have a giant portfolio that you want to clear out and like make your next trade, we're going to be supporting like pricing NFTs at bulk. So that's one thing that we're going to be working on. In terms of on the pricing side, we're going to be looking at expanding to other L1s. For example, right now we've launched a beta for Solana, where we support a couple of NFTs as well, and that's going to be we're potentially going to be doubling down on some other L1s as well, just like Sui or Aptos. So yeah, those are kind of things on the roadmap.
Awesome. Listeners, definitely go check out SPICYEST. You can get in touch with David on Twitter. You can get in touch with them in the project on SPICYEST on Twitter as well. We'll include the links in the show description. But David, thank you for your time today.
Yeah, for sure. Thank you guys so much for having me.
Follow me on Twitter. I'm 0xTayTayHoho on Twitter. That's Tay with an E. And you can follow Ryan at _Helmass.
Yeah, and that's _HELMASS. Thanks everyone for tuning in, and we'll catch you soon.